Hi, welcome to the Market Alert for Thursday, the 15th of February 2016. So yesterday in the pound, just the one sell signal, the market moving down to this psychological level here. Let me just grab this one because then the market waited for the US CPI figures. This is the, I'll find it for you, 138.50 level on the blue line there. Then the market started to come back. And then we were hit with the US CPI figures. They came out far worse than expected. Incredible. Not that it's a big deal, but in percentage terms it is. Because previously they were 0.1, forecast at 0.3, and came out at 0.5% there. So this sent the market into a bit of a tailspin. Get the right chart back. So you can see there we've got the pound down as the dollar went up. They tested the market and then they brought it back up. And in the daily chart, this is what it looks like. That's support here at the 138.35 has held. The market now heading up towards the 62 and 76% retracement area there. And here you can see the dollar index. This is the daily chart, down, big sell-off there yesterday, heading to the 61% retracement. If the market takes out the low down here, let's just draw that in there. We've got there, we're looking at the 88.17 level. If that's taken out, then expect the market to continue lower there. So keep an eye on that one. Let's just have a look at the 5-minute for yesterday and see how the market reacted. I'll just have to turn those off there. So there's the news for the dollar index, or the dollar index's reaction to the news there. You can see them straight up and then back, and then down we go. So again, just keep an eye on this one, because this market should it continue to break these new lows, or the fib retracements as well, then you can expect to see more movement on the pound to the upside, and that'll probably be the way it will be until we start to get this sort of unraveling of the financial markets at some point this year. And then you'll see the pound move, even though the financial markets will be moving, brought on no doubt by Trump's, or the excuse will be used that Trump's tax reforms is what's caused the instability in the markets, and then you'll see the pound move lower and the dollar move higher, because then no doubt we're getting close to the Brexit thing. That's going to be bad news. You can see the script already. And in the Dow, well, in the pre-market session everything was fine, and then we had this massive drop here. You want the precise drop on here, just go to the top, down to the bottom there, and you'll see it was a good 500 points drop there. And then the market, as ever, was brought back all the way through the session and continues higher in the overnight session as well. And in the daily chart, you can see this here as well. So even though we had a bit of a wobble yesterday, back below the 62% retracement, the market now heading up to 62.76, and this is going to be the crucial area here, the 76% retracement from this high to this low, and that marked up. So we'll be looking for something like that if there's a weakness is going to dominate this market. And speaking of news, what have we got today that could be a bit of a pain? At 1:30 we've got the PPI figures. As the market's now taking notice of the news again, it seemed to have stopped, but we've got the PPI figures out at 1:30, at 6:30 while I'm recording this. Yeah, there's nothing else really, it's just those PPI figures, and they're forecast at quite a big jump as well, from 0.1 to 0.4, so you could see a bit of a wobble around there. It's interesting that the news now all of a sudden is being noticed by the market when it hasn't been for some time. In the implied volatility, this down yesterday, which is quite staggering really, given the way the market sold off 500, came back. 1812 down to 1648. We're moving down quite nicely now for this market to continue to move to the upside for the time being. Also keep an eye on, if I can find it, looks like I noticed it, on the 10-year yield. This at 2.91, the major area for this market is going to be the 3% area, which happened in 2014, which is just here, and we're heading back to this level here as well. And of course things are different now. I keep going on about it, but the government, or the Fed rather, not the government, the Fed are trying to offload the balance sheet into a rising rate environment and at the end of a 10-year business cycle as well. So it'll be interesting to see what happens. I don't think the world's going to end if we get to 3%, but who knows what the bond market will do, if it will sell off, causing the stocks to sell off, or you may get the madness of it, they'll actually buy back in to force the yield back down. You just don't know these days. The markets don't work the same way as they used to. News-wise, as we say here, the US Treasury entering the death zone there. Albert Edwards here saying that we just had a small taste of the coming financial collapse. I mean, at some point it's going to happen. And then in Bitcoin, this was boosted yesterday. You'll see that price is moving higher. Got that triangle pattern, as I said to you yesterday, generally breaks out to the upside. And that's precisely what happened yesterday. And the reason for that was Bitcoin soars after, let's get this to work. Bitcoin soars after above 9,000 after South Korea backpedals crypto ban. So even though they were going to ban it, they've now changed their minds, and we're seeing the cryptos move higher. And I would expect this to continue, whether we like it or not. Cryptos are here to stay. And also we're going to see more and more of it, and in 5 years time it will be unrecognizable and part of the financial system. And if you haven't got a cryptocurrency app on your phone, then you will be out of the loop, as they say, and eventually you will be brought into it either by central banks who will develop their own, along with some of these that are already around now that will become household names, like Bitcoin Cash, Ethereum, Litecoin, and one or two others as well. Right, that will do it for this one. Let's see what happens during the sort of overnight morning session, and hopefully not too much. We don't want too much volatility. We want it to calm down a bit. So let's see what happens. Right, as ever, thanks for watching. See you in the next one.